Welcome to a deep dive.
Today, we are digging into the Q1 2025 earnings call for Zhihu Inc. It just dropped.
Right, we're going to unpack the transcript, pull out the really important stuff, the key numbers, the big strategic shifts, how they're leaning into AI.
Exactly. Our mission is just to get you the clear picture fast. And this quarter was pretty interesting. A real turning point, actually.
A turning point.
Yeah.
Okay, let's start with the headline results then. What was the big news?
Well, the major story, what everyone's talking about, is that Juljah hit non-GAAP net profitability in Q1.
Okay.
And that's for the first time since their IPO. It wasn't just scraping by either. It significantly beat what the market was expecting.
Wow, first time since IPO. That is a milestone. So from losing money to making it, what are the actual figures?
So on that adjusted non-GAAP basis, they reported a net income, a profit of RMB 6.9 million.
Okay, 6.9 million RMB profit. And compared to last year?
Well, that's the dramatic part. Same quarter last year, they had a loss of RMB 135.7 million. So quite the swing.
That's a massive turnaround on the bottom line. But looking at revenue, the top line, that was actually down year over year, wasn't it?
It was, yeah. Total revenue came in at RMB 729.7 million. Last year, Q1 2024, it was RMB 960.9 million.
So a noticeable drop. How did they explain that?
Management framed it very much as a strategic choice. They explicitly said they're focusing on revenue quality and the overall mix, rather than just chasing top-line growth right now.
Okay, so the implication is they're deliberately cutting lower quality, maybe lower margin revenue streams.
That's exactly the narrative, a trade-off. They want a healthier, more sustainable model. And you definitely see signs of that working in the margins.
Right, because the gross margin went up quite a bit despite the lower revenue.
Absolutely. Gross margin expanded by 5.2 percentage points compared to last year. It reached 61.8%.
And that's tied to efficiency.
Directly. They pointed to improved operational efficiency right across the business.
Efficiency seems like the big theme here. Operating expenses were down too, right? Significantly.
Hugely. Total operating expenses dropped 34.4% year over year. Came in at RMB 503.7 million.
34%? How?
They put it down to, tight cost management and efficiency improvements, specifically calling out tech integration as a driver for those gains.
Makes sense. And all this feeds into the GAAP bottom line too. Still a loss, but smaller.
Much smaller. The GAAP net loss narrowed by, get this, 93.9% year over year. So a huge improvement.
94%. Wow.
And remember, on the non-GAAP side, this is actually their second profitable quarter in a row. They hit it in Q4 last year, too.
Okay, so a trend is potentially forming there? Profitability seems less like a one-off. What about cash? Still solid?
Yeah, cash position looks very stable. They ended March with RMB 4.8 billion in cash and equivalents. That's about, 660 million US, very similar to the end of last year.
Okay, so profitability achieved, costs down, margins up, cash stable, and pretty solid financial picture setting the stage. Let's pivot then to the strategy they laid out. Sounds like it was heavily focused on their community and this big push into AI.
That's right. The core strategic focus for this year, 2025, is all about linking their community ecosystem much more closely with the commercial side of the business.
How so? What's the goal there?
The aim is to boost the brand's commercial value, gain more pricing power, and ultimately build what they keep calling a sustainable, long-term business flywheel.
And AI is the key to getting that flywheel spinning faster.
That's exactly how they positioned it. They said investing in and exploring AI applications is like a top priority. They see it as a major catalyst for growth, especially because it can leverage their unique assets.
Which are?
Their trustworthy content and that deep community expert network they've built over the years.
Right. They even had a kind of formula for growth in the AI era, didn't they?
They did. It was something like trustworthy content, community expert network, AI capabilities. It really spells out how they see their existing strengths as the foundation for AI success.
And they've already taken steps. This contributor attribution feature they launched in Q1.
Yes, that's a key early move. It basically tags high-quality content back to the specific expert creator.
Why is that important for AI?
Two reasons, mainly. One, it amplifies the influence of their experts. Two, and this is crucial, it helps combat AI hallucination. When AI makes stuff up, especially in very specialized fields, by clearly showing the source. They said it's been well received so far.
And they have their own AI interface, Juljah.
Correct. Juljah is live, acting as this conversational way into the community's knowledge. How users interact with it gives Juljah really valuable feedback.
Feedback specifically on how AI works with their content.
Exactly. It helps them build AI tools that actually leverage their unique knowledge base, not just generic models. And engagement with Juljah apparently showed strong growth sequentially in Q1.
What else is on the AI roadmap?
Well, integrating more experts into this formal expert network they're building.
Yeah.
And continuing to aggregate more high-quality, trustworthy content. A big next step they mentioned is launching public knowledge bases.
Public knowledge bases. Build from what?
Build on the existing personal knowledge libraries that their experts contribute. The idea is to make that validated, trustworthy content scalable and more broadly accessible.
Interesting. Any specific plans for the launch?
Yeah, they're planning initial launches in specific sectors, timed around China's big college entrance exam season. The idea is to offer reliable, expert-backed support for students during that period.
So scaling validated expertise through AI makes sense.
Exactly. And they even hinted that their expert network might evolve further, maybe beyond just content, as agent-based AI tech develops.
How does AI play into the money-making side, like marketing services?
Management seems quite bullish here. They said AI is opening up totally new marketing product opportunities. They think AI actually turns some of their traditional, maybe niche characteristics into real structural advantages now.
How so?
Because they have this trusted, high-quality content that ranks well and this network of experts, they see themselves becoming a key upstream node in the whole AI search value chain. Basically, a valuable source for AI systems.
That's a bold claim. Okay, shifting from strategy to the community itself. How is the health of that core asset looking based on Q1?
The metrics they shared look pretty positive. Time spent per daily active user, or DAU, jumped to nearly 38 minutes.
38 minutes, that's high.
Yeah, up almost 18% year over year. Core user retention rates improved too, both quarter over quarter and year over year. And they saw creator activity pick up.
So their focus on quality, maybe not just chasing user numbers, seems to be deepening engagement.
That's certainly the story they're telling. They said the priority is the quality of the ecosystem, the atmosphere. And these numbers suggest they're building a stronger, more committed community.
And that expert base is really the foundation of it all.
Absolutely. The platform's known for deep professional discussions. That flow of high-quality content builds trust and drives the kind of interactions that set them apart.
Did they give any proof points on the content's impact, especially with AI?
They did. They noted that AI-related professional content specifically grew 46% year over year on the platform. And maybe more importantly, they highlighted how this content ranks well in search engines and gets cited frequently by LLMs and AI search tools. They even threw out a stat from a Qubit Research Institute report.
Oh, yeah. What was that?
Saying Juhul's content is cited almost 4 times more often than the next platform when it comes for professional domains being used by AI assistants.
4 times. That's actually really significant. It underscores the value of that curated expert content for training and grounding AI.
Right. It's a powerful data point for them.
How about the creators themselves? Are they growing, becoming more influential?
Looks like it. Daily active high-tier creators were up sequentially. The number of verified honor creators grew 20% year over year.
And their impact?
Growing too. For creators in some key programs, interactions per creator jumped over 45%, and the number of posts surged more than 95% year over year. So these experts are definitely getting more reach and engagement.
Did they mention specific types of experts or topics?
Yeah, they highlighted frontline experts in really niche current AI areas, things like LLMs, intelligent agents, embodied AI.
Embodied AI like robots.
Yeah, AI that interacts with the physical world. Also autonomous driving, model compression. They specifically mentioned founders of new AI startups, key developers from major open source AI projects choosing Juhu to share technical insights or document their startup journey. People like the founder of Xingu and Yangshu, Shuaju, Professor Joe Bu, folks involved with Cuban, generating a lot of buzz within professional circles.
Attracting top talent to share their work there. And they're building tools to help these creators.
Right. They mentioned upgrades to features like column for longer articles and idea for shorter posts. The goal is to support different types of professional content and offer better ways for creators to interact and, importantly, monetize their work.
Are those new features getting traction?
Apparently, yes. They saw rapid growth for the new column feature, both in creation and consumption, and a big jump in the volume of ideas from professional creators in Q1.
Okay, let's drill down into the different business segments, because the overall profit improvement hides some pretty varied revenue performance, right? Starting with marketing services.
Right. Marketing services revenue came in at RMB 197 million, That was down quite sharply, 40.4% year over year.
40% drop. That's steep. What happened there?
This goes back to that strategic shift we talked about. They said this decrease was mainly driven by adopting the trustworthy content model. Basically, they cracked down on low-quality marketing content.
How much of a crackdown?
Consumption of that low-quality marketing content apparently fell by over 90% year over year. So a huge chunk of presumably low-margin revenue just disappeared.
So painful in the short term, but part of the plan to focus on quality.
Exactly. And they say they're now optimizing their client mix, focusing on attracting clients who value their expert community. They mentioned partners like Huawei's HarmonyOS developers and China Mobile Cloud.
Trying to connect high-value advertisers with their high-value users.
That's the idea. They also think leveraging AI for new marketing products, while keeping the overall ad load low, is improving things like CPMs, the ad rates. They believe the quality advertising revenue pool is actually growing steadily, even if the total is down for now.
Okay, next up, pay membership. How did that segment do?
Pay membership revenue was RMB 417.9 million. It's pretty stable compared to Q4, but slightly down from RMB 449.7 million a year ago.
And the number of paying members?
Actually, quite resilient. Average monthly paid members hit 19.2 million. That was up 1.2% sequentially from Q4. Still slightly down year over year, but the sequential uptick is interesting.
Any insights into why? What's their strategy for membership?
They talked about focusing on the ROI of acquiring new members, getting better quality members who stick around. They're also pushing premium short-form content and exploring new formats to drive conversions and keep people engaged.
Did they give any examples of successful premium content?
They did highlight an original audio drama called Love with Ghost King over 3 lifetimes. Apparently that did well.
An audio drama. Okay.
Yeah, branching out. And they're also investing in longer form stuff. They mentioned season 4 of their Union Story long form writing marathon just launched big competition, 6 months, cash prizes.
So mixing up the content formats, short, long, audio, written to appeal to different tastes within that paid tier.
Seems to be the strategy, yeah. Fulfilling diverse needs.
Okay. And the third main segment, vocational training.
That one also saw a decrease. Revenue was RMB 94.5 million, down 35% year over year from RMB 145.4 million.
Another strategic shift story here.
Yes, very much so. They described it as an ongoing transformation. They're moving away from just adding more traditional courses based on subject.
Do what?
Towards a model that's more integrated with the community, more socially interactive, more based on knowledge sharing, leveraging their creators and content ecosystem. The goal, again, is better efficiency and profitability for this segment.
So empowering creators to offer paid training or knowledge sharing.
Exactly. That seems central. They mentioned product development focused on integrating paid knowledge with social features, like that column product again, helping creators build a community around their expertise. They plan to keep building this new model out.
Got it. And finally, there's other revenues.
Pretty small. RMB 20.3 million, down from about RMB 35 million last year.
Okay. So a real mix on the revenue side across the segments. Marketing and vocational training down due to strategic shifts, pay membership relatively stable, but the overall profitability jump really comes down to that efficiency drive.
Absolutely. We mentioned the operating expense cuts earlier. Just to recap the specifics, selling and marketing down almost 33%, R&D down 28%, and general and admin a huge 55.6% year over year.
Those are serious reductions. And this ties into shareholder returns too, right? They seem to be leaning into buybacks. Now they're profitable and have stable cash.
Definitely. Management made a point of emphasizing shareholder returns. They detailed what they've already done recently, buying back shares on the open market and through trustee.
How much have they bought back?
As of late May, it totaled about 49 million Class A shares for roughly $93 million US combined.
And there's a new, bigger program coming.
Yes. The board just approved a new program running until June 2026. It authorizes them to repurchase up to 10% of their total issued shares. That's quite significant. It does need shareholder approval at the AGM, though.
10% is a lot. What's the rationale? Just boosting the share price?
The official line is that management believes the current share price doesn't reflect the company's true value. So, yes, it signals confidence in their future prospects, and it's a way to return capital now that they have positive cash flow and profitability.
Okay, let's wrap this up. Looking forward, what was the overall message from management about the outlook? Confident.
Very confident, it seemed. They expressed real determination to seize what they see as this big AI opportunity. The plan is to keep building on that community trust and strengthening the connections between their high-value users and experts.
And the core strategy remains that blend of content, community, and AI.
Yes. They reiterated that their competitive edge comes from accelerating how those three elements, high-quality content, the trusted creator network, and AI, work together synergistically.
And they expect this to translate into financial results.
They do. They sounded confident that the strategy, plus ongoing efficiency efforts and just tight management, puts them in a strong position for sustained leadership. They even suggested financial performance might beat their initial expectations for the year,
With the ultimate goal being.
driving sustainable growth, sustainable profitability, and delivering long-term value to shareholders.
Okay, that paints a really clear picture from the Juljah Q1 2025 call. You've got the huge headline hitting non-GAAP profitability way sooner than expected, really for the first time since IPO, driven by massive cost cuts, efficiency gains, and this strategic pivot.
Right, a pivot towards quality revenue, doubling down on their community and content strengths, and betting big that AI is the key to unlocking future growth, even if it means some segments shrink temporarily during the transition.
It's definitely a company in transformation. So, reflecting on this deep dive, here's something for you, the listener, to think about. As AI gets better and better, and platforms integrate it more deeply, what is the long-term value of human experts and curated communities like Zhihu's?
That's the multi-billion-dollar question, isn't it? How do you balance the incredible scale and efficiency of AI with the trust, the nuance, the unique insights that come from real human expertise and genuine interaction?
Exactly. Where does that balance land? Something to chew on.
Definitely a fascinating space to watch.
And that wraps up our deep dive into the Zhihu Inc. Q1 2025 earnings call.
We hope this breakdown helps you understand the key moves and the strategy behind the numbers.